During the housing boom, subprime mortgage lenders inscribe borrowers in balloon loans. These loans start with low interest rates, but after 2 or 5 years, they blow up to unaffordable heights. Once the loan has been processed, the lenders collect a hefty fee for their work, and get out. They sell the loans to companies including Citibank and Bank of America. Those institutions look profitable on paper because the notes they've purchased promise high interest returns. For a while, everything seemed ideal. People moved into nice homes. Subprime lenders got rich. Bank executives received lavish bonuses. Since the situation was win-win-win, everyone raced to lend and borrow as much as they could as fast as they could. Until interest rates started ballooning. Suddenly, the new homeowners could no longer make their payments.
During the housing boom, fast funds was the name of the game, and home loans were hammered out at a record pace. But now, as foreclosures continue to rise, people are taking a closer look at the terms of those mortgage agreements.
Some bad arithmetic going on here.
Tamara Loatman-Clark had an insider's view.
So on a typical Thursday, I may have 15 or 20 files that I need to get funded somehow. And, you'd work very hard to get 20 files funded. Whatever hit your desk for the day is what you wanted to get out.
Employees were under constant pressure to close the deal fast.
Every closing we had really was a bait and switch because you could never get them to the table if you were honest.
The entire system is built to do whatever you can to close as many loans at the highest fee amount as possible.
There were instances where the borrower felt uncomfortable about signing the stated income letter because they didn't want to lie, and the stated income letter would be filled out later on by the processing staff.
Internally, the incentive was to do whatever you needed to do to get them out, and that sometimes meant that you manipulated documents to get them out.
The house was going to go in foreclosure. There was really nothing I could do. I didn't have the money to be able to pay this. It basically went from, all this to a foreclosure to now my credit being completely shot.
Out of the loans that you worked on, what percentage of those loans do you think people are now having trouble paying or possibly even facing foreclosure?
I would say the majority. I would say 90% or upwards of that.
In cases where borrowers were manipulated, or had their loan applications modified without their approval, ethical accusations can be pointed in 2 directions. Toward the loan reps who misled the borrowers. Toward the corporate executives who oversaw the loan operations.
You did what you had to do. And again, if that meant manipulating documents so that you can get them out, so that they could conform, that's what you did.
Every closing we had really was a bait and switch because you could never get them to the table if you were honest. There were instances where the borrower felt uncomfortable about signing the stated income letter because they didn't want to lie, and the stated income letter would be filled out later on by the processing staff.
15 or 20 files that I need to get funded somehow. And, you'd work very hard to get 20 files funded. Whatever hit your desk for the day is what you wanted to get out. Hindsight being 20/20, you can look back and say, wow, I had a hand in all of this. But, if I was a young professional, and I was at the time, I was doing my job to the best of my ability. Things didn't look quite right, but again, if you're a low-level employee, you don't make those kind of, conscious decisions.
This came from the very top. This was an industry broken from Wall Street on down. So if you're going to indict people, you need to take a look at the heads of companies like AmeriQuest, who set a culture up that said, do whatever it takes to close a loan regardless. And to the Wall Street banks who pumped money into those companies and said, we want you to sell us millions of mortgages, and we're not going to look at what you're selling us.
The entire system is built to do whatever you can to close as many loans at the highest fee amount as possible.